The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good. Lewis, welcome everyone. We're going to take a look here at what the Fed's going to be doing today. The first chart we'll look at, of course, is the DAX. As you can see, the German market came off, rapidly. I don't know if it's related to the new moon today and the fact that we have the start of the Hebrew Rosh Hashanah Yom Kippur cycle. I don't know if that's the case or not, but I do know that these equinoxes are very, very important. In Dr. Lowe's book, The Evolution of Technical Analysis, he spends the first 50 pages in that book talking about the first technicians, which were the astrologers going back thousands of years ago to the Sumerians and the Babylonians, and basically they were predicting the price of corn and wheat by looking at these different lunar things. So whether that's going to be a function in our market someday or not, we'll have to wait and see. There's been some discussion here in the Tiger Den today about earthquakes. I've sat through 3 number 7s while I lived in California. The first one was just scared me literally out of my shorts, and I'll tell you why. I was on the 20th floor of the McCulloch Oil Building. Conti Commodity had just opened the office there across the street from where the Clayton office used to be, and it had been there about a year and a half, and it was supposed to be the first earthquake-proof building in Los Angeles, and it was brand new. And folks, that building was shaking, and it had virtually no damage to it, but the sound of an earthquake is the scariest part, because everything in the house is shaking, or wherever you are. It's just making a lot of noise. But folks, let me explain to you the difference between a tornado or a typhoon and a hurricane versus a earthquake. There's no comparison. Those hurricanes and typhoons and tornadoes, they don't leave anything. They rip everything out. When I was very small, in the 1940s, we had a tornado in Terre Haute, Indiana, and I was in the basement of my grandparents' house, where my grandpa made wine and salami and suppressa and stuff. And when we came up, the only thing that was still there was the cistern, the well that we used to get water. I mean, it just destroyed everything. It was a little dumpy little house, but everything was gone. I mean, there wasn't even a piece of paper that said someone had been there. So these natural things are terrible. What's so scary is you see 5 or 3 class 5 hurricanes. I can't ever remember that. Larry Williams lives down in St. Croix in the Virgin Islands, and I'm in contact with him quite a bit. And he's in the midst of this number 5 coming in now. I guess the name is Maria, and he still has functioning water and electricity and everything. He's not even on a generator. So even though there's a lot of water and a lot of wind and stuff, he's still functioning. So you just never know. I have one other little story about that. Is the tsunami in 2004 during Christmas. I think it was 2004, or maybe it was, I forget the years. I know it was Christmas. It was December 26th in Thailand, when they had that big underwater earthquake and they had that giant tsunami. One of my trading buddies, a student of mine from many, many years ago, was living on the east side of Phuket. And he was married to a Thai girl that had lived there her whole life, and she never wanted to travel anywhere. But she wanted to go to Hong Kong to go Christmas shopping. So he took her to Hong Kong to Christmas shopping, and they were in the hotel when they saw the tsunami hit. And I didn't know he was still alive for 3 weeks, but when they got back 2 weeks later, the only thing that was there was a little piece of a metal from the house. I mean, everything was gone. I mean, the foundation had even disappeared. Yes, I was in the I was in California. My daughter was taking a class at Northridge that day, and but that was a tough one. But they're very devastating. The problem is they upset everything for a long period of time. Hopefully none of you folks have had any trouble with that kind of stuff, but I've been fortunate. I didn't have any earthquake damage in any of those things, other than a few, maybe a broken glass here and there, but there was really nothing to really complain about compared to what these other folks have to go through. And that's the other thing, folks. Try to help other people out. They had something on Bloomberg today about the billionaires, how much money they give. Folks, after you have $1 billion, can you explain to me how you spend $1 billion? Yeah, that's 1,000 million. You know, and Jeff Bezos has given, he's the second richest man in the world now, and he's given $64 million out of his $64 billion. Boy, he's a generous little puppy, boy. That's the equivalent of you and me giving a penny. Well, that's neither here nor there. Let's get back to the markets. We're on the DAX. I'm off my soapbox, folks, okay? I'm not going to do any more preaching. Reverend Tyrone Passahat Johnson has moved to a different job, and that is the DAX Daily. And you're going to see here that we've got a really interesting chart here on this DAX, because notice the fact that we've had these three dojis in a row here in the DAX, right at the right near the 61% retracement and a perfect 1.618 expansion. This is going to be very interesting. It's going to have to get some power coming out of here to get it to move, and it can certainly do that without too much trouble at all. Now, I don't want to talk about the bonds until we get to the first break here, but I do want to mention, the fact that we have this new moon that we've got going on right now. I wanted to show you a pattern here, and this is Minneapolis wheat, folks. This is the one that caused that big run-up during July. That's when we had that big run-up in these markets. Hold on one second here. This was the one where the wheat market was totally destroyed. This chart's been telling you a different story, folks. And now you see we're almost at the 78% retracement here. We have another butterfly pattern coming in here, just about 10 cents lower. We're right over the new moon. So keep an eye on Minneapolis wheat, because if that turns, it could turn, our wheat and also possibly corn. But that's neither here nor there. The reason why I brought this up is that we have several people that follow us here at TFNN, and they happen to be quite big in agriculture, and they have always believed that this Minneapolis wheat was going to go a great deal higher because of the fundamentals. Well, you can see that is just the exact opposite of what is actually happening. And when I get back from this next break, I want to show you something else that I've mentioned before that is doing the exact same thing that Minneapolis wheat is doing, and that, my friends, is Apple. This stock has big problems. We'll go over those in a little bit, but we'll see what happens as we come up to our first break here. Hopefully next week we're going to have our good friend Stan Harley back on, and also Bill Meridian out of Vienna, Austria. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhoades, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, this is a weekly chart of Apple that we're looking at here. Let's just go through some of the fundamentals on this. They've just come out with their iPhone 10, and it is only starts at around, I don't know, $800 to $1,000. I don't know exactly the price, but it's quite expensive. The fundamentals on this stock got to be about as bullish as you could possibly get. They got something like $200 billion offshore in cash, and I mean, you just go through one thing after another, and you can see that there's a lot of bullish things going on. But folks, this stock, this is a major pattern here. If you look at it really closely, the top that it made way back, way back in 2010. Let's just get that back up here so we can look at it again and again go through it. Well, you can see the chart that's there. That made the high, it dropped about 50%. Did the same thing again once before. This leads us to a target of about 106 to 110 in Apple if it's going to do the same thing that it did the previous time. If we look at Apple on a little bit shorter time frame, going back to a daily chart, you can see here that we've also completed these 1.618 expansions at that level. So that's something that I think is, pretty good pattern here. They're asking, would I short Apple here? Yes, I would, because the only thing you do is if it gets above 166, you're wrong. And if you're trading, this is trading at what, 159 right now, so you're risking about 7 points. And it's got a possibility of 50 points. That's 7 to 1. And that's certainly, it'd be nice to sell it back on a rally, but frankly, this has been lagging the market for the last week or so. Even the NASDAQ, folks, I mean, even though the Dow's made new highs, the NASDAQ is the same price it was 7 days ago. So there's no, wild breakout here. I personally think that this new moon that we have is going to be important. But these lunar cycles, they're short. term, and sometimes they don't work, as we know. Our good friend Mr. Winsky has told us that he's in a sell zone, and but that doesn't mean that it can't go up, and it has been going up. And hey, it goes up whether it's nuclear war, whether it's the threat of nuclear war, 3 Class 5 hurricanes, 1 8-point earthquake in Mexico, followed by a 7.2. It's just one after another, and yet the market keeps going higher. And our good friend Shane Smolian has said, as long as the Fed is pumping the juice, this thing's not going down, and he has been flat spot on. And that's another one of our guests we want to get back on here, because he's been preaching this to us for a very, very long time. Unfortunately, the services I don't attend as often as I should, but anyway, that's pretty much going on. By the way, Mr. Bill just made the earthquakes moving to New Madrid in Missouri. Norm emailed me last night. They had an earthquake within 100 miles of Terre Haute, Indiana, on Tuesday. Now, it couldn't have been very much because my sister didn't call me, but it was in Albion, Illinois, which is about 100 miles from Terre Haute. So it was a 3 or 4.1, but it was not very deep. And the deep earthquakes are the ones that really do the rocking and rolling. So, but anyway, these things come and go. They're hard to predict. They do happen a lot over new moons, however, because of the gravitational pull of that moon is enough to trigger it. But, that's beyond my pay grade, but we'll see. It's just really sad to see it. For some reason, it seems to hit the poorest people the worst, but that's usually the case. But you can Google it if you like, and you'll see as much about these things as you possibly want. If you're in the giving mood, I would suggest you pick a church, contact that church, and use them. I don't like to use the usual charities that are out there because they take so much in fees for their, running the things, and I don't particularly like that. We've had a question from one of our good friends in Hong Kong, and we want to take a look a little bit here about the Hang Seng Index, and we'll put this up here. It's the Hang Seng Index, folks, not the Hang Seng Index that I typed on here. Anyway, that's a difference in the time zone. But you see, we're right at a double top from where we were in 2015, but more importantly, I think, is you have that big ABCD from 2016. We came down to the 50% retracement and then went up and made a perfect ABCD there at 20,800, and that's where we're trading right now. So that's completed the ABCD. Whether it's a double top or not, certainly remains to be seen. So that's what I see in the Hang Seng. However, if we take a look at the Hang Seng on a shorter term time frame, let's go to a daily, and we'll pull it up again because all of these charts look so darn much alike. Hold on just a second. There we go. You'll see the Hang Seng Index here on the daily. We made a little bit of a butterfly pattern yesterday on a short-term basis. Plus, you'll see that ABCD pattern that's there between April and July, and that's the main thing that we have. By the way, we're chatting about earthquakes here in the room at Tiger Financial, and when they had the earthquake in Christchurch, New Zealand, must have been about 10 years ago, one of the traders there put together a charitable webinar where several of us guys would donate our time and to this webinar, and then they would raise the money for us. And I happened to be one of the folks that did that, and we raised a lot of money, well over $100,000 over a small webinar that was able to help about 9 families. So that was through one of the smaller churches there in Christchurch that he belonged to. But that was a good thing to go through. But boy, that was a really devastating earthquake to those folks. So, all right, let's try to get off the earthquakes and move on to some of the things. Folks, there's a trade that looks really interesting here. Well, there's two. Well, they all look interesting for sure. We've got the Fed today, and that's always a fun thing to look at. Let's take a quick look at where we are here in the gold market, because this is in the realm of what I think could happen today. If we take a look at we'll get into Treasury bonds right after the first break, folks. I want to spend a little more time with the Treasury bonds because they're sitting on the earthquake fault. They're on the San Andreas fault right now, so we'll see what happens here. Let's take a look here. This is the gold going back. A 4-hour chart takes us back well over 4 months. You can see we broke out above the $1,300 level, went up to $1,364, and if we get down to around $1,298 today, that's only $17 from where we're trading right now. That would be a two harmonic numbers down. That's 34 times 2 is $68 down from the top. It touches that old breakout line, but more importantly, even with all of that, the most important thing is that it's going to be right at a 382 retracement of that low that we made back in July the 8th, back at 1206. So that's going to be a very interesting thing to look at. Now, if we get much below the 1290 level, this is certainly going to be a suspect, but it should have a lot of support right under $1,300 an ounce today. And with the Fed in there at 2 o'clock Eastern time, you know, they give their little speech and everything. But frankly, when we get back from the break, I'll go over the bond chart, what I'm looking at. Here again, we're only looking at fundamentals. I have no idea on the we're only looking at technicals, boys and girls. I'll be right back. 877-927-6648. Bye.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to be talking now about the Treasury bond market. I've posted the chart that I was looking at starting on Monday to see the market come down to the 61% retracement at 154. We have certainly done that. We were there yesterday. We're again there today. My question is, everybody not everybody, but most people are not expecting the Federal Reserve to do anything. But if you'll notice here, we've hit that 61% retracement. If that were the case, you would think the market would already be rallying. But, they're going to wait until the final result is out. But this is where the pedal meets the metal, because if it breaks below that, you're looking at another handle down to 153. And if you get below 153, folks, you're going to be looking at 144. Because this is a long-term bearish chart, as we've seen many times before in both notes and bonds. Frankly, I don't think it makes any difference whether the Fed raises rates or not. But the market, why would it make any difference if nuclear bombs haven't done anything to it? So I don't think the interest rate scenario is going to make any difference at all. That's what it looks like to me. But for today, as we come into Fed time, we need to watch that price in the Treasury notes and Treasury bonds, especially the bonds at that 154 level. Also, when we were chatting about gold, I forgot to mention that at that 12.99 level, $1,200 to $1,300 per ounce. There's also ABCD structure there that also would make that a very interesting spot to look at. So that's the one market that I'm watching most closely today for something dramatic to happen, is in that gold market. Also, stocks. I still think that we're in an area here where stocks are ready to roll over. They haven't got the memo yet, but I keep sending the telegrams, but no one's answered. But one of these days they might. But the market is so quiet that that's just amazing to see that S&P trade in a 5-point range all day, several days in a row. It is itself very, very unusual, which leads us to believe that the work that Shane Smolian has done has been spot on, that the market is being manipulated by the Fed, and they can do with it whatever they want, because if it sells off, they come in and buy it. And we'll see if that continues to hold, but that's what's going on right now. I wanted to switch gears here for just a minute and talk just a little about commodities. The next chart that we're going to look at comes from my good friend Jim Flanagan, who we've had on the show before, from GAN Educators in Santa Monica, California. And if we take a look at this, what this is a long-term chart of the commodity market index, going back to last January. Hold on one second, folks, and I'll be right back to you right here. I will take a look at the euro just as soon as we're done with this one. This is the Thomson Reuters Commodity Index. As you can see, we're in a minor uptrend in here. There's a high probability that this thing has turned for a longer term, and that's what we're looking at here, because that last low that we made there on June 22nd was a perfect retracement of the low from January the 20th. So that's going to be very, very interesting to see what is going on with this. But we're starting to see some of the things, make turns, and we're right over this new moon, so we should seeing an up move in wheat, and also in the wheat's going to be based, I think, on that Minneapolis wheat, because that's been the one that's been, the leader of the pack. So if that doesn't turn, the wheat market's not going to go anywhere. So we'll watch that. Let's get to the euro, because we've had a couple requests. Here's the one we posted at in the euro. As you can see here, we were looking to see this euro to get up into this. We got a caller. John, are you there?
I am, and perfect segue, Larry. The euro chart that you just pulled up on Tiger TV is exactly what I wanted to talk to you about today.
Yes.
Larry, first an observation on the euro. After falling from that 135 level down to 105, 104, That was 14.15. Big fall. And then the euro just went sideways for 2 years. 116.17 on the high side, 105, 104 on the low side. So nice big base. So 104 up to 117, 13 points basically. The euro rallied above that. Of course, things got going back in April and May when there was the French election and there was concerns about, I forget the woman's name, who did not win, and Macron beat her. And the euro started rallying, and we broke out above 16.17, those prior highs, the top of that 2-year base. Just from a very simplistic perspective, a trader's idea or forecaster's idea that I've learned long ago and seen work in real time many times is that once a market forms a base with defined highs and moves above, and in this particular case 116.17, odds are reasonably high the market moves decisively higher for a decisive period of time. So my question is, I guess just using that idea, 125, 128 is in our future for this currency. My question is there something you're looking at that would call that into question? And if it doesn't call that into question, where are the buys to get up to 125, 28, please?
Sure. John, I posted the chart for the euro on a monthly basis now, and I've put the cycles in. This is one we've covered before here in the Tiger Den, and also I try to do it in my newsletter once a month, do the monthly chart. But if you look at the monthly chart going back to 1984, it has some of the most clear-cut cycles that you could look at. I mean, they have a 95-month cycle, 180-month cycle, and both of those came together right when the market was bottoming around that 104 level. And because we've shot up here for the last 8 months without any major correction, we have 200 pip corrections here or there, but they don't even show on a monthly chart because they're so minor. What we're looking at now is this 120 level, which happens to be a 1.27 expansion, as you can see, and it also on that other chart that we looked at, that hourly chart, that's a head and shoulders. So that's where I think the correction would be. Now, John, if you take the longer term viewpoint, if you'll see the downtrend line that I have there that comes in around the 114 level, if you could get a nice pullback to the 114 level to take a couple of months to do that, that would be an extremely bullish sign for the euro. But John, I don't trade weeklies and monthlies. I look at the market basically on 4-hour charts because those are the ones that give me the trading opportunities that allow me to see the patterns that I'm looking at. So I'm looking at this just from a long-term perspective, and I was very, very strong about that possibly being a 16-year low when we were down there at 104, because we took out the lows of the last 3 years and didn't go anywhere. That's a bullish sign. Stay with us, John, till after the break, okay?
Yes, I will. Thank you.
Yeah, because I think this is important because it relates to the dollar.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Ewa Bank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're talking with John from Philly. And John, I posted into the room just a blank chart, 4-hour chart of the euro. And you can just look at it, and, you know, a head and shoulders pattern just absolutely jumps out at you. And that's the reason why I'm bringing that up is I'm showing you because that gives me a place where I can risk, you know, less than $500 to enter. If I'm trying to do a weekly or monthly chart on the euro, you know, I've got to give it a lot of berth, you know, to see if it's going to be right or not. But with the shorter term patterns, that allows me, you know, to use something that is, you know, more applicable to risk control. Does that make any sense?
Yeah, it sure does, and thanks so much for showing that. I'm looking at that. Actually, you posted a 60-minute chart with that head and shoulders that I'm looking at right now, so thank you very much. Just one follow-up, if you could, please. Thank you for that monthly chart, the long-term, with what that shows up at the high back. I'm just looking at the chart, I think it was September 7th or 8th, up at 121. That mark hit precisely a long-term fib 1272 expansion level, and now we backed off a bit, but not much. The follow-up question is this. If the euro starts to rally further off the low last week, that low I'm looking at right on Tiger TV on September 14th down at 118.50, if this rally from that low, if that rally now gets up and surpasses 121, in other words, the high of 2 weeks ago, and also the long-term fib 1272 expansion, would that be a pattern that would suggest to you an immediate acceleration higher, having moved over 1272?
Oh, sure, absolutely. If we get above 121, the next level is the 1.618 that comes in at 125. which is, not unusual. The easiest way to figure this out is to go back and look at the lows that we made in 2007. You see we went from 124, to 150. We rallied 22 points in 2009, right after the bank's too big to fail thing. We also had a 50-point rally in the thing. So this thing could easily go all the way up to the 61% retracement of the whole thing, and that would take it in to make a head and shoulders pattern up around the 144 level. It could very easily do that. That's 24 points from where we are right now.
I'm sorry. I now feel fully prepared to act on a trade. And just for tutorial perspective, not that I'm trying to force any trades. As you're looking at the euro right now, it's right at 120. Is there any very short-term setup that you see as an obvious pattern completion and a turn or reversal or extension?
Sure. It's that 60-minute chart that I posted, the blank one, because we're sitting right at the we're at 0.72 right now. And I believe that's going to be it, because that's the time has come due between the left shoulder and the right shoulder. In other words, the time is right, and we're just actually the 61% retracement comes in at 120.05, and we're trading at 120 right now. So, that's like separating, apples and oranges. It's very easy to see the difference there is only 5 pips. But to see if you're right or not, the 78% retracement is at 120.45. That's 20 pips from the high that we've made already. That's only $250. So that's an acceptable risk. If you're risking $400 or $500, you can sell it and put your stop above the 78% retracement.
That is certainly manageable risk, no doubt about that. Yes, thanks so much for reviewing that. I can't tell you how invaluable I find being able to look at some of these things real time and just scope out the parameters. So great teaching, Larry. Thanks so much.
Well, thanks for calling in, John, and we really love to hear from you, because you really know the business. And let me ask you one other question, John. What's your feeling here about the wheat market? We're sitting over, an equinox, and we're also, looking at a new moon. Do you have any feeling on what wheat's going to do here?
I bought it yesterday, 8 points lower. I already booked the gain, so that tells you. Those actions speak louder than words, and I will tell you, I'm more inclined to suspect there's greater rally potential in the soybean market next couple of weeks than there is the wheat market. Mm-hmm. And that's just a suspicion. So back to wheat, I've been buying dips, but booking gains on rallies. I've also been buying dips on the soybeans, and booking gains on rallies as well. Just a fundamental factor that I'll care to share with you. When it comes to the wheat market, we're in a period of time where the major harvests are already done or completing now. So we're in a situation where for the next couple of months, supplies are pretty well known. Soybeans are a bit different, because we're just starting with harvest, in the U.S., and there is a debate here in that market, and that is what is the actual crop size relative or compared to what the estimates are. And what I can tell you is the estimates coming out of USDA are for a very large crop and very high yields, not record, but close. And there's a great deal of speculation within within some of the people I respect, let's put it that way, that are thinking the estimates of yield and crop size are overstated, and as actual harvest results start rolling in, and they're starting to roll in, down in the south working northward, that the potential exists for those results to actually come in smaller than the current estimates. And what I'll share with you, I found it instructive to examine the price action back in 2010 in corn and soybeans, starting from Labor Day in through December. That was a case, that year was a year in which the estimates for crop size were high, and the actual yields that came in right off the harvest results were smaller than those estimates, and there was a substantial rally. So precedent for that idea does exist. 2010 is a good case study. So to answer your question, buying dips and wheats and also beans, but looking to or suspecting greater rally potential in beans near term. And, of course, that's guessing about the future, and, of course, I don't know that, but there's my guess.
Nobody else does either, my friend. That's the main thing. Listen, John, we really appreciate your feedback, and all the good trades that you post in the den are greatly appreciated, and we want to thank you a whole lot.
Thanks so much on the euro. Appreciate your time.
Well, let's see what happens. Okay, folks, that was Mr. Z from Philly. He'll be back with us again soon. We'll take a little break here, 877-927-6648.
Hi, I'm Steve Rhoades, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we'll be back here in just a second. Here we go. We're going to take a look here at this Michigan survey of consumers because it looks real interesting. We are at new all-time highs. We've exceeded every high that we've had going back to the time of Moses, I believe. So we've never had this many people this bullish, and usually they're right for at least a short period of time, and it's certainly been working that way recently. Remember, we are over a new moon today, and we also have the situation of the equinox coming in later in a couple of days, and we also have the there's one other factor that's there, and I can't remember what it was. But anyway, there are three major cycles coming in here today. Oh, it's the Hebrew cycle of Rosh Hashanah, Yom Kippur. That's only an 8-day cycle, so we'll see if what's going to be the case. Anyway, that's what I'm looking at. So we'll see how things work. The VIX index is still holding above the lows. We're still trading at a little above 10. And if you bought that thing down around the 983 level, I'd keep the stop at break even and then just see how it rips. The same thing in the IWM. That has not been able to make new highs, even though we're relatively close. We did make new highs in the New York Stock Exchange Index again, which was substantial. So that's this market is still going higher. I'm just saying that there's a lot of patterns completing in here, and then with the equinox and all the other things we just talked about, that makes me assume that we're pretty close to where we're looking at. Finally, on the bean front, we're moving over to January beans now from November, and if you can get January beans down about 15 cents from here, to me that looks like it would be a very interesting thing. Apple is bearish, folks. That's the bottom line. I mean, I showed you what I see technically. I don't know anything about the fundamentals, but that chart is that's a very bearish chart, and that's all I can tell you. That's what it looks like. 877-927-6648. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom OBrien's daily market letter, Market Insights. Tom OBrien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.